In today's episode of Crypto Over Coffee, we're looking at the Bitcoin ETF approval and the hidden messages that we found looking at the statements from the commissioners of the SEC upon the launch of that Bitcoin ETF. So we're going to look at some of the statements both from the dissent and from the approval, so the votes in favor, and we're going to kind of unpack what some of these hidden messages are. Some of these things that are underneath the surface, subtext, if you will, and we'll also talk about some of the things in here that I have personal intellectual gripes with. So let's dive into these first. Now, for those of you who are unfamiliar, if you've been living under a rock for the last, I would say probably several years, there's been clamoring amongst the Bitcoin community and in the crypto community for Bitcoin spot ETFs. Basically the ability to acquire Bitcoin at its current value and get exposure to it without having to own the physical asset, or I guess metaphysical asset. And this was recently approved and on January 10th. Now, of course, people imagine, oh, well, the price of Bitcoin is going to shoot up to 100K, 200K because of all the money that's going to flow in. Hasn't really worked out that way. And we talked about that in the last few episodes of the show, which is that it's not a guaranteed win right away. This is a midterm type of benefit that Bitcoin spot ETFs have. But that's besides the point. We're going to talk more about these statements and some of the things that were in this statement that I think bear some more analysis. So I'm going to first, and yes, I'm like a boomer. I like to print stuff out and highlight it. Easier for me to read that way. So I printed out a few statements. I printed out Gary Gensler's, printed out Caroline Crenshaw, and Hester Peirce. Okay, so these are three commissioners of the SEC who are party to this decision to approve the ETF. I'm going to start with Chair Gary Gensler's approval statement, and it is a one-pager, and there's some interesting stuff in here. So I'm going to read this stuff out to you, kind of give my thoughts, explain a few things. So let's do it. This is from Gary Gensler. I've often said the commission acts within the law and how the courts interpret the law. One of the filings for Bitcoin ETF contemplated the conversion of the Grayscale Bitcoin Trust into an ETP. Now I'm paraphrasing there so that you don't have to listen to the whole thing. We're now faced with a new set of filings similar to those we've disapproved in the past. Circumstances, however, have changed. The U.S. Court of Appeals for the District of Columbia held that the Commission failed to adequately explain its reasoning in disapproving the listing and trading of Grayscale's proposed ETP. Now, ETP and ETF are generally the same thing. Now, this is a really interesting thing right here, because what this does is it basically calls out right up front the reason why this ETF product is being approved. It's being approved because the SEC is out of options to disapprove it, to reject these applications. And a lot of that has to do with the Grayscale versus SEC court case that was recently decided in favor of Grayscale, where Grayscale basically said the SEC is not giving us any valid reason, any reasonable explanation as to why they're rejecting these. And in a later statement from Caroline Crenshaw's document, there's some interesting stuff there. And in Hester Peirce's, there's actually a quantifiable value that she ascribes to the waste in dollars, taxpayer dollars, that have gone into rejecting these applications. We'll get there. It's really interesting here because Gary Gensler is basically saying the quiet part out loud, but just in a nice way, which is we are out of options to reject these applications, and thus we must approve them. Now, the big thing that I want to point out here is everyone's like, okay, well, now there's a Bitcoin ETF, a spot ETF, or an ETP as it's called here. So that makes sense. We're going to get Ethereum next. The answer is no, okay? The Ethereum ETF conversation is much, 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 much more complex because Bitcoin, under no circumstances could you qualify it as a security. It is through and through a commodity. There's no question about it. The problem with Ethereum is there's a lot more up for debate there. The proof of stake aspect of it, the distribution of Ether early on, there's going to be a fight. While I don't think it's a security, there are a lot of people who do, and there are a lot of people in the SEC who do. So this court case was really about Bitcoin, not about Ethereum, from my understanding. So be very careful about assuming the Ethereum ETF is coming next. Now, the rest of this is pretty mundane stuff. It's just explaining how these instruments are going to protect investors. We already know those things. The last paragraph of this is the most important thing. There's this piece right here. It says, since 2004, which is when the gold ETF was approved, the first one, the agency has had experience overseeing spot non-security commodity ETPs. So they're calling, again, Bitcoin is a commodity. It's now in writing, such as those holding certain precious metals. That experience will be valuable in our oversight of spot Bitcoin ETP trading. Now, they're likening Bitcoin to gold here, and then, which is a good thing, but then they're squandering it. Gary is squandering it here. Though we are merit neutral, I'd note that the underlying assets in the metals ETPs have consumer and industrial uses, while in contrast, Bitcoin is primarily a speculative, volatile asset that's also used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing. Now, what I would say here is very, it's kind of like a 404 logic not found moment. Though we're merit neutral, and then spouting off a bunch of things that don't come across as very merit neutral. Now, you sort of done a little bit of digging into the sources that were shared for the claims around illicit activity. And while those things do point to illicit activity use, they don't really point to as much of the volume, and they don't compare it to other assets. This is the problem that I have. And we're going to talk about this more when we get to Caroline Crenshaw's statements, which is the most scathing of the dissent towards this Bitcoin ETF or ETP. The usage of Bitcoin in illicit activity like money laundering and sanction evasion and terrorist financing in particular, ransomware will put aside, there are other assets, namely other assets that are offered as ETFs or ETPs, namely gold, that have long been the preferred asset or one of the preferred assets for people conducting these activities, particularly money laundering. And there is a FATF or FAT, I forget the actual meaning of the acronym there, but there is a study from 2015 that has a lot of really interesting quantifiable data around the usage of gold. Why is gold useful in those cases? Because it's really easy to mine it out of, sort of out in the middle of nowhere, find gold, melt it down, and it's easily sellable on the open market. It's also really easy to melt down gold, restructure it, reformat it, do whatever you want. It's untraceable. Anyways, we won't go too much into that, but that last statement there really tells that, in my opinion, the SEC has not been operating in a merit neutral way. And we're going to talk about that as well a little bit more when we get to Hester Peirce's statement. All right, so we're going to put Gary aside now. And we're going to move on to Caroline Crenshaw. And then we'll kind of do like a compliment sandwich where we have Gary's, which I think was relatively neutral, a little salty, but pretty neutral. We're going to have the dissent, and then we're going to round it out with the hurrah, the ETP or ETF is approved. So this is Caroline Crenshaw, Commissioner Caroline Crenshaw. Largely, we can now tell, so she voted against this, and the vote was, I believe, 3 out of 5, and there were 2 dissenting. One of them was Caroline Crenshaw, Commissioner Caroline Crenshaw. And people are now kind of pointing out that it's very likely that Commissioner Crenshaw is going to be the not the villain, but the opposition in the SEC going forward. So let's just bear that in mind. The first part of this that I want to read is context around fraud and manipulation. One of the reasons why, ostensibly, Commissioner Crenshaw voted against approval of this ETP. One analysis of 29 major crypto exchanges found that wash trading was, on average, as high as 77.5% of the total trading volume on unregulated exchanges. Now, how about regulated exchanges, the ones that you say there are plenty of? That's a big question that I have. The other thing we don't have is context. Total trading volume, 77.5% of, say, 10 million is a lot different than 77.5% of 10 billion. The fact that there is no dollar value in the actual statement tells me that that number is probably pretty low. I'm sure we could read more on the source here, which I haven't done yet, to find out that number, but I think you should have numbers, especially because in the next statement, He's talking about the researchers that came up with this value. The same researchers estimated that wash trading was present in over 4.5 trillion of crypto spot market trading and 1.5 trillion in crypto derivatives trading in the first quarter of 2020 alone. Now, this is actually probably true. Maybe I don't have any way of verifying the numbers, but there is a lot of wash trading in crypto. The point is, this doesn't delineate at all Bitcoin, which is the subject of this ETF, versus just general crypto assets. So now we're commingling, in my opinion, without calling it out here, right? Without someone going deeper into the data, which I think they're betting on, you wouldn't know what this is referring to. 4.5 trillion of Bitcoin volume or 4.5 trillion of general crypto volume. The latter I would believe, the former I do not. So really important stuff here. This is how data can be used to sort of manipulate opinion, which really irritates me. Anyways, if I have to go look more deeply into the data to read a statement that's illustrating an opinion, I start to question it. Here's another one. Indeed, just yesterday, prior to the issuance of our approval order, one of the SEC social media accounts was compromised, and an unauthorized post falsely indicated that we had approved spot Bitcoin ETFs. Unsurprisingly, the price of spot Bitcoin suffered whiplash in the minutes and hours following the false tweet. While the facts underlying this misconduct hopefully will be uncovered by law enforcement in the future, I'll be monitoring what may yet be another attempt to profit from wrongdoing in this market. Now, because the SEC failed to adequately secure their Twitter account, it would seem, of course, we have no way of verifying that until research is done. I don't really see how that's the market's fault, to be quite honest with you. Yeah, the SEC social media account was compromised, and there was a preemptive announcement that happened. But there's a lot of things that concern me about that. How did that happen? Is it not the SEC's responsibility to secure their social media accounts? I have a question about that. And yes, when you have a highly speculated and basically an 8 to 10 year ramp to get to a destination, the market is going to react pretty excessively to something. There's a lot of pent-up emotion and a lot of pent-up speculation in this because of how much of a circus has been made around the ETF, and that is not the market's fault. So I have an issue with that for sure, being pointed as a problem with Bitcoin and approving this. It has nothing to do with the actual product. It has everything to do with how this whole thing was conducted. And then there are other reasons why, listed here, other reasons why Crenshaw voted against this. Commissioner Crenshaw voted against this, noting concentration of ownership. There's an interesting sort of jab here, basically saying that the concentration of Bitcoin supply is in a small number of holders and miners. And it says here, this concentration is ironic given that Bitcoin was touted as the product to decentralize finance. I don't really think Bitcoin was the product that was touted as decentralizing finance. So I don't really think that that's super accurate. I would also say that there is a pretty large quantity of people, despite minor centralization, which I kind of agree with. There are a large concentration of people who have a significant amount of Bitcoin. There are a lot of individual holders now, way more than there ever have been. So we're trending in the right direction, not in the wrong direction there. So I don't really totally agree with that statement. This one is it's sort of a hidden gem in this statement. One of the reasons given here by Commissioner Crenshaw for why there's a dissent on approving this is a lack of unified oversight. A lack of unified oversight. Among the reasons that crypto markets, including Bitcoin spot markets, appear to be petri dishes of fraudulent conduct is because there's little to no systemic oversight of these markets, nor other sufficient mechanisms in place for detection and deterrence of fraud and manipulation. This is not only in many ways false, because Bitcoin is much easier to track and trace than other traditional instruments like gold in terms of its use for illicit activity. It's also easy to spot fraud and manipulation because, as I've said many times before, these things are very transparent and clear. The second thing I have an issue with here is the lack of unified oversight is whose fault exactly? The lack of unified oversight is the responsibility of the regulators and their inability to put together with the market, in collaboration with market participants, sensible regulatory frameworks that actually address this lack of oversight. There are concerns here that could easily be resolved by common sense regulatory structure, which have not been materialized. And I think the SEC should look inward and think about their participation in that process or lack thereof. Anyways, moving on. Here's another one that I find relatively interesting. There it is. This is about talking about how futures products and spot products are not the same, and how the SEC's sort of questionable ability to regulate in this particular space of spot puts people at risk, right? Even if the commission or exchanges were to identify specific fraud and manipulation, there might be little to no recourse for investors. As one commenter put it, the difference between buying a Bitcoin futures ETP and a Bitcoin spot ETP is the difference between buying a lottery ticket from the state of New Jersey and buying a lottery ticket from Tony Soprano. Points for creativity. I really like that in many ways, hilarious. But the reality is it breaks down in terms of an analogy, because exposure to futures products has its own set of risks and its own set of difficulties that, in my opinion, do not outweigh the risks of spot, especially when you look at the trajectory of Bitcoin in the fullness of time. There is volatility for certain. There are events that cause liquidity meltdowns for sure. But this comparison between basically buying a lottery ticket from the state and buying a lottery ticket from a mobster, a gangster, really sounds ridiculous to me, because either way, when you are buying a security, you are gambling. Think about SPACs. Think about the fact that gambling is now all over every major sporting event that you possibly watch, encouraging people to literally waste their money. So the fact that lotteries exist, the fact that gambling exists, etc., people should just be armed with the knowledge that when you are investing in something, you're not guaranteed to win. The odds are not always in your favor. Educate people. Don't prevent them from doing it. All right. Moving on. This order does not consider the broader public interest. This one talks about FTX, and I find this relatively interesting. When FTX imploded in November of 2022, many among us breathed a sigh of relief that the downfall of one of the most central players in the crypto market had little impact on global markets more broadly. And I find this one to be just a particularly confusing and frustrating statement that I hear repeated very often amongst the Senator Elizabeth Warren sort of group. And this is, well, the crypto markets pose systemic risk to our financial system, X, Y, and Z. And then in the same breath, people say that it's an insignificant, relatively useless, and relatively stupid market. So which one is it? Does it actually have staying power, and does it have enough? Does it pose enough of a risk? Is it large enough to pose a systemic risk to other financial systems or global markets, or not? I really have failed to see an answer to that question. Now, this is the one statement in this whole document, and this is one of the biggest surprises, the biggest hidden things that people haven't really talked about much, that I think we should all be thinking about. Really good food for thought to chew on. The last piece here of reasons to dissent is, wasn't Bitcoin supposed to solve this? And this is really interesting. When I read the white papers, it can be hard not to buy in. Many of the goals of the crypto ecosystem are goals I support. How can you be against freedom and prosperity? But when I look at products like the ones at issue today, I have a simple question. Wasn't Bitcoin supposed to solve this? If the technology is so revolutionary, why do so many of its uses seem to revolve around recreating the existing financial system, except with less regulation, more opacity, fewer investor protections, and more risk? Bitcoin is a peer-to-peer system. Individual investors in the US who want to invest in the product may already do so, either by mining it themselves or by setting up a wallet and buying it from someone else, each of which they're able to do from the comfort of their living room. That's the whole point of creating a new censorship-resistant digital currency. So why is so much energy expended on linking it to the existing financial system? I fear that our actions today are not providing investors access to new investments, but instead providing the investments access to new investors in order to prop up their price. There's a lot in this, and some of this I agree with, right? we do have this issue right now in crypto where we are putting way too much emphasis on recreating the existing financial system. And I don't necessarily agree with more opacity because that's just tacitly not true. Less regulation also, I think, is a result of the inability for regulators to work with the community here to put in place sensible regulations. And more risk, yeah, there is a lot of risk, but there's a lot of risk in the stock market as well. So I don't really see how that makes a lot of sense. Individual investors in the US who want to invest in the product may already do so. That is true. And there was a video maybe 3 years ago that I made, which said, like, do we really need a Bitcoin spot ETF? Because back then this was still a conversation. And I still believe we don't really need one. In many ways, this does feel like, in many cases, that this is trying to put the investment in front of new people. And you know what? That's not a crime either, because that's what the stock market is all about. It's putting forth your company to be invested in by others. It's putting something in front of people to invest in. And there is a chasm. There is a difficulty for investors that want access to Bitcoin to actually do so in a spot environment, to get access to units, because it's still technologically somewhat challenging to do that. Mining also is not really attainable by an individual anymore, so I would have a gripe with that one. But overall, this is something that we should really be thinking about. Why are we putting so much stock, pun intended, I guess, in bringing all of crypto, bringing crypto assets into the traditional financial system? And I think it really is because people just want the number to go up. And that's okay. Of course, I want the number to go up. Who wouldn't? But we have to also think about the signal that sends and what that does and what potential impact that has to the overall mission and ethos of the space that we're in. All right, last one. This is from Commissioner Hester Peirce. And Commissioner Peirce has long been one of the allies for this space. So I'll read you some of these excerpts. Until today, the Commission remains steadfast in its unwillingness to let spot Bitcoin ETPs into U.S. markets. In the meantime, the Commission has driven retail investors to less efficient means of attaining Bitcoin exposure in the securities markets. This is so true, right? Talk about the idea that you would like to protect investors from risk, but you're pushing people towards futures products, which in my opinion have more risk and are harder to navigate for the average investor, the unsophisticated investor in particular, and you're also driving people to unregulated exchanges and regulated exchanges who the SEC for some reason still claims are non-compliant. This is something I have a major issue with. It's in the interest of protecting investors, not providing them a regulated mechanism by your rules to get access to this product makes no sense to me at all. So at least the ship has been righted there. Until a court reminded us that our unexplained discounting of the obvious financial and mathematical relationship between spot and futures markets falls short of the standard reasoning or standard for reasoned decision making, we persisted in denying a spot Bitcoin ETP. The Commission, rather than admitting error, offers a weak explanation for its change of heart. In the past, the Commission, allowing our prejudice against the underlying asset to get in the way, has rejected applications on the basis that the Bitcoin market was still immature and that there were outstanding manipulation concerns. Again, this is going back to the court case. This is stating very clearly that there were no reasonable explanations as to why they were rejecting these applications for a Bitcoin spot ETF, and that the only reason that this is even happening is because a court case eliminated the final reason that they were rejecting them. Really, really interesting stuff. We've squandered a decade of opportunities to do our job. If we had applied the standard we use for other commodity-based ETPs, we could have approved these products years ago, but we refused to do so until a court called our bluff. And even now, our approval comes only begrudgingly, as demonstrated by our continued insistence that these products satisfy a correlation test that we have not demanded of prior commodity-based ETPs. A clear call that you're moving the goalposts at the SEC, that there's a different standard for this market than there are for others and other commodity-based ETPs. Pretty damning stuff, to be honest. And then Hester goes on in this relatively scathing review of the SEC's conduct on this, talking about reasons why this has done harm in general. So I'll read a couple of the big ones. I won't bore you reading every single one of them. Diminished trust from the public will inhibit our ability to regulate markets effectively, and it has continued to do harm to our reputation far beyond crypto. So this is basically talking about how the antics here have harmed the reputation of the SEC, and it has. If you look online, the SEC is relatively hated amongst both the securities community, the stocks community, and by the crypto community, and it's because of a lot of this drama here, right? Our disproportionate attention on these filings have diverted limited staff resources away from other mission-critical work. Over 10 years, likely millions of dollars of staff time has gone towards blocking these applications. I talked earlier about quantifying the waste that has gone into denying these applications without just cause or without reasonable explanation. Millions of dollars of staff time, which ultimately I believe is taxpayer dollars, that I have a major problem with. Our actions have muddled people's understanding of what the SEC's role is. Congress did not authorize us to tell people whether a particular investment is right for them, but we have abused administrative procedures to withhold investments we do not like from the public. This is the hidden gem of the whole thing that we've talked about today. It is ascribing a purity test to investments that, in my opinion, should have been applied to other things in the past that have really hurt people, and in this case are being applied to Bitcoin and crypto only. And I find that to be relatively offensive. There are a couple of other ones. I'm going to read through these to make sure that they are... okay, so this is my exact point. This is the last one I'll read. By failing to follow our normal standards and processes and considering spot ETPs, we've created an artificial frenzy around them. Had these products come to market in the way other comparable products have, we would have avoided the circus atmosphere we now find ourselves. This is so true. I talked about this earlier. In Commissioner Crenshaw's statement, it's about the whiplash suffered in the market when the Twitter account for the SEC tweeted that things have been approved when they actually hadn't been. No wonder, because you've created all this pent-up craziness around this product by no fault of the market, and that's why you have this. And then later, Hester goes into, or Commissioner Peirce, I want to use the honorifics, talk about alienating an entire sector of product innovators in this space. And that is also very true. And that is a major risk to the United States. So there's a lot in these. Don't want to read you the whole document. I know I read a lot. So if this is not the type of video you're interested in, I'm sorry, but I thought it was very important to get through this and to talk about this because there's a lot in here that's really important. And I'm going to wrap things up on the show today with some questions from the community, okay? I'll answer a couple because we're already pretty well into time, and we will get a couple of these done. So let's talk about this one. What's your take on the Coinbase upcoming case? So Coinbase has been definitely fighting in the trenches, especially with the SEC, on a variety of different things. And I think the Coinbase case against the SEC is going to be a case even bigger than the XRP case in a lot of cases. Well, that's a lot of cases there. My thoughts are this. It's going to be really tricky for Coinbase to stand and say that they have never offered an unregistered security, because there are a lot of tokens that have been listed on Coinbase that, if we're applying the traditional rules, you could argue are securities. And people may not like that, but that's just the truth. And even if they've offered one, then the SEC has a little bit of leverage there. However, I think if you look at just thinking about the statements that we talked about today, and you look at the climate around this, the SEC is wildly unpopular, and they've lost their last two major court cases on this particular subject. They've had a couple victories, okay? There are some victories, like the library case, for example, but a lot of these are settlements, right? So where things have gone to judgment, I think the SEC is coming from an eroded position. This Coinbase case is going to be one of the ones that takes a really long time to resolve. And I think people are looking at this like it's going to be a quick, maybe a year, but no, it's going to take a long time for this to be resolved. And it may take several attempts to resolve. It may even be split into multiple, multiple cases. Though I think the SEC's strategy now of basically deflecting and saying, no, I'm not going to rule make, or no, I'm not going to give clarity I'm just going to enforce and then we'll figure it out after. I think the judicial system is growing very tired of that and finds that indefensible. So that is the way to win, is to show basically contempt from the SEC, an unwillingness to meet regulated entities where they are, and regulated entities that are making an attempt to comply and to work together with the SEC to formulate what is meaningful rulemaking. And the refusal to do so, I think, is the way you win that case. So this is something that we'll have to watch more closely. We'll have to dive into more deeply. Those are my thoughts on that. Let me take one more because we are already well over the normal time that I like to do this. Let's see. This is from CryptoTech 2025 on Twitter, or on X, I guess. Which projects are truly focusing on onboarding solutions and user friendliness for the masses rather than bringing out niche new tech solutions that only experts or devs can use? Crypto's cumbersome, unsafe, and expensive, and the average Joe walks away because of it. That must change. 100% true. The average Joe does not want to be in crypto because the average Joe has gotten burned by crypto or has no clue how to get started. So I would say there are a handful of projects that are doing this. I think Magic Link, they've done a really good job of making the wallet onboarding process really easy. There are some crypto gaming projects, like Immutable X, for example. I guess they're more so a gaming ecosystem now, that have done some really good work on making the gaming space easier to attain. So I think there's like 2 or 3 pillars of good UX in crypto and making things easier to use. One, it's dealing with the wallet issue, creating non-custodial wallets. So wallets that are self-managed, that are relatively protected from misuse. So not having seed phrase, for example. So not allowing people to mistakenly give everything up. Multi-sigs could be a useful application there. Account abstraction is an interesting use case there. With social recovery, that's one, right? So solving the wallet issue, both the onboarding and the maintenance of that wallet going forward. Being your own bank's a big responsibility, and it's not easy enough now to do it. People have trouble having good passwords, okay? So there's a long way to go before people are ready to be their own bank. The second piece is the actual accessibility of it. Lower fees, right? Not saying no fees. No fees does not work, okay? There's an economic reason you need fees. So it can't be no fees, but low fees, relatively quick. There's like the 7-second rule. And I think it's probably more like 3-second rule now on the internet, where page doesn't do anything in 7 seconds, people click away, they close it, they're done. I think it's more like 3 seconds now with the social media age. People don't wait very long. So if transaction takes 10 minutes to finalize in a game or on an exchange, no one's going to be cool with that. So really, I think that's a big one. Fees and performance of the chain. And that's separate from the user, but it's something that we should be considering as a user experience piece. Then the last one is the actual experience of using the chain. How easy is it? The actual interfaces. And I think because the bar is so high for the actual technology piece, so a decentralized exchange, for example, a lending protocol, Peirce, etc., these are all really complicated smart contract-based applications that not as much attention goes to the user interface. A lot of the user interfaces may also be designed for traders, and that's not the average person. The average person's not a trader. So there are a few companies like Rainbow, for example, Pillar and Argent, and these are a lot of Ethereum ecosystem folks. Phantom's pretty good. Wallet providers and people who are kind of building aggregate solutions that make it easier to use this to do things in this space, from a mobile app that looks nice enough that you would say, oh, this is a fintech company, or this is a like a social media app or whatever. It feels like what people are used to. So user experience is going to have to come a long way just from the tangible interface people are interacting with these applications through. So I've named a few projects. It's definitely not an exhaustive list. I would say that everyone in the space could do a little bit of work from the perspective of like dApps. dApps need to continue to do work to make their stuff easier to use. Uniswap's pretty decent, actually, I will say, but still not easy enough for the user to do what they're looking to do and get it, right? There's a difference between that. In this space, there's a lot to lose. So you can't abstract away all the details such that people don't know what's going on, where they can get hurt doing that. But you also don't want to put too much on the screen so that people have no clue what's going on. So it's about making it easy, but helping people understand. So education is going to be a big part of user experience going forward as well. Those are my thoughts. I know we've been talking for a long time. Hopefully this video was helpful to you or interesting to you to hear not only some of the statements from the SEC commissioners that you may not have actually seen or heard of because they're buried on the SEC website, but also to hear my analysis or my reaction to those. If you agree with something I said or disagree with something I said, please do leave that in the YouTube comments or tweet me at Hashoshi4 on X or post me. It sounds stupid now. Should be tweet anyways. But above all, thanks very much for joining me on Crypto Over Coffee today and every week. I'm looking forward to seeing you on the next one. All right, take care. Cheers.